Thanks for tuning in for some more stock market news. For more videos, press the like button and subscribe. With that being said, let's get straight into today's stories. The week began on a positive note for the stock market as tech companies rallied, providing a much-needed boost to the Nasdaq index, which managed to snap a 4-day losing streak. Investors are eagerly awaiting Nvidia's upcoming earnings report, which has generated significant interest. The technology sector's performance played a pivotal role in shaping the market sentiment, with the Nasdaq leading the charge. We also saw a rise in vaccine manufacturer stocks due to COVID variant concerns. The emergence of new COVID variants, while concerning for public health, has paradoxically contributed to a rise in the stock values of companies that produce vaccines. Novavax, Moderna, BioNTech, and Pfizer all experienced an increase in stock prices as the anticipation of fall and potential booster shot demand drove investor confidence. This unique market dynamic underscores the interplay between global health concerns and financial markets. Speaking of vaccines, the FDA's approval of a respiratory syncytial virus vaccine for pregnant individuals represents a significant development in healthcare. Pfizer's vaccine, designed to protect infants from this common respiratory infection, is a crucial step in reducing hospitalizations among babies. Additionally, the approval of antibody treatments by AstraZeneca further emphasizes the commitment to combating respiratory infections, and both treatments are anticipated to be available in the coming months. In other news, the automobile industry faces high prices and loan delinquencies. The automobile industry is grappling with challenges as both new and used car prices have soared to unprecedented levels. According to a report from Cox Automotive, the average cost of a new car surged over 30% since 2019, reaching an average of over $48,000. Used cars faced a similar fate, with average prices also seeing a 30% increase compared to 2019. These high prices, coupled with the prevalence of high-interest auto loans, have resulted in a record number of new car owners struggling to make payments above $1,000 per month. The auto industry has undergone significant changes in response to fluctuating prices and supply chain disruptions. The popularity of larger vehicles, coupled with pandemic-related production challenges, has contributed to a shortage of affordable compact models. Despite this, recent trends indicate a gradual decline in new car prices as dealers report increased vehicle inventory. Electric vehicles have seen particularly significant discounts, with manufacturers engaging in a price war to capture market share. Since we are talking about EV news, during Tuesday's market trading, Tesla experienced a 2.8% jump to reach $237.80 per share. This boost follows last week's China insurance registration data, which revealed that Tesla's sales in China remained relatively stable compared to the previous week. On Monday, Tesla's stock surged by 7.3% to reach $231.28, helping to reduce the losses the company's stock had incurred in August by 13.5%. Notably, China has shown robust demand for Tesla vehicles in August, with 39,400 insurance registrations recorded, a remarkable 125% increase compared to the same period in 2022. These numbers suggest that Tesla is on track to match its China sales levels from the second quarter of the year. In Q2, Tesla achieved the sale of 247,217 vehicles made in China, constituting approximately 53% of the company's record-breaking global deliveries, totaling 466,140. Financial analysts predict that Q3 will see around 473,000 global deliveries, as indicated by FactSet data. Also, news of an updated version of Tesla's Model 3, codenamed Highland, is also circulating in China. Reports suggest that mass production and deliveries of this updated model are slated to commence by the end of September. Some local news sources have even reported that reservations for the new Model 3 are already being accepted at certain stores. Amid these developments, executive changes are occurring within Tesla. Colin Campbell, who served as vice president of powertrain engineering at Tesla for 17 years, announced his departure on LinkedIn. Campbell is joining Redwood Materials, a company founded by Tesla co-founder and board member J.B. Straubel, in the role of Chief Technology Officer. For IPO news, we have Arm, which is a UK-based chipmaker, which is preparing for a substantial initial public offering that is set to take place in September. The company, acquired by SoftBank in 2016, is looking to raise billions of dollars in capital through its IPO. SoftBank's pivot toward an AI-focused strategy, with Arm at the center, underscores the high stakes involved in this move. Arm's IPO is expected to be one of the largest of the year, influencing the decisions of other tech companies considering their own public offerings. Now let's talk about the travel industry, which is on track for significant growth, with estimates suggesting it could become a $15.5 trillion industry by 2033. The World Travel and Tourism Council predicts that travel's contribution to the global economy will surpass 11.6%, representing a 50% increase from 2019. The industry's expansion is expected to create employment opportunities, with projections indicating that approximately 430 million people will work in the sector, accounting for 1 in every 9 jobs worldwide. In the latest retail developments, malls are experiencing a resurgence by adopting omnichannel marketing strategies, combining online shopping with in-person retail experiences. While the rise of e-commerce initially posed a threat to malls, brands have recognized the value of offering both digital and physical shopping options to customers. Gen Z's continued interest in brick-and-mortar stores, coupled with investments in retail space, has led to a decline in retail vacancy rates, in contrast to rising office vacancy rates. In entertainment news, TikTok's foray into e-commerce through the TikTok Shop has the potential to reshape online shopping trends. The platform's push to sell over $20 billion in products by the end of the year places it in competition with established e-commerce giants like Shein and Amazon. While TikTok's move into e-commerce has raised concerns about algorithmic promotion and advertisement content, it highlights the platform's efforts to diversify revenue streams and capitalize on user engagement. For technology news, we see that Elon Musk's influence on world-changing technologies and government reliance on his ventures is explored in a profile by OpenAI CEO Sam Altman. Musk's role in providing services like Starlink Internet to Ukraine's military highlights the complex relationship between entrepreneurship and government dependencies. The profile sheds light on the tensions that arise from the intersection of private businesses with global public interests. Essentially, any business that Elon Musk touches turns to gold, so if you are an investor, it would be wise to not bet against Elon Musk or his companies. Speaking about technology news, ride-hailing companies like Uber and Lyft are grappling with evolving labor legislation, particularly in Minneapolis, where a new gig labor bill mandates minimum wages for ride-hailing workers. The potential impacts on ride-hail services include higher fares, the removal of certain ride options, and even a city exit by Lyft. This situation reflects ongoing debates surrounding gig labor protections and their implications for workers and service providers. In other news, Spotify's decision surrounding white noise podcasts underscores the tension between content algorithms and profit optimization. Initially considering limiting white noise content, Spotify aimed to increase gross profits by directing users towards more talk content. The controversy highlights the challenge of balancing content creators' interests, user preferences, and financial goals in the rapidly growing podcasting landscape. In global real estate news, China's property market is experiencing uncertainty as Evergrande, once a major player in real estate development, seeks bankruptcy protection in the U.S. The collapse of Evergrande could have widespread repercussions due to the property market's significant role in China's economy. The situation highlights concerns about potential contagion effects and their impact on the broader financial landscape. Lastly, let's talk about a notable quick news update about Domino's Pizza closing its stores in Russia amid franchise bankruptcy. The ongoing ramifications of Russia's invasion of Ukraine caused over 1,000 Western companies to leave the country. This business exodus highlights the far-reaching consequences of geopolitical actions on global trade and investment. Thanks for watching the latest stock market news updates. If you made it all the way to the end, press the like button and subscribe for more videos like this one. With that being said, I wish you happy investing.